Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And today, going to do a little update. It's been a while since I put something out into YouTube, just myself, or not a podcast. So, Sibanye Stillwater, talking about platinum group metals at the moment. I think it's a significant opportunity. In a nutshell, the way that I see this opportunity is similar to the offshore thesis, or even there are some parallels to the uranium thesis with regards to platinum group metals. So, going to have a look at that today in an overview type video. Disclaimer: nothing I say is advice, of course. And if you are interested in reading further about this topic in the Substack, which I'm opening right now, I have written an article. I've written two new articles. One is purely about Sibanye Stillwater, and I've recently released one on Valaris. Okay, so you can jump in there. They're both accessible for free. Okay, so without further ado, let's take a bit of a step back in time. So I believe December, January, I put out a video. Here are some of my old notes from that video around the opportunity platinum groups and why I think that Sibanye Stillwater was the way to play it. So here's my analogy. Platinum group supply deficit in terms of there's been really not a lot of capex and a perceived demand weakening. When you look at it, demand really hasn't been that bad. There's been a recent oversupply, particularly in palladium, because Norilsk and or the Russian production is coming online in increased velocity in order to fund the conflict, unfortunately, in the Ukraine area. So you had all this surprise palladium coming onto the market. No one knows exactly how long that will be available for on the supply side. So that would be a bear case. Now, with that being said, here are the deficits that were put forth at the time of the video from Sibanye themselves. Okay, so this is going to take a long time for this to play out. What I think that is going to happen is the demand front end loaded, which you perhaps would have seen in the 2027, 2028, 2029, or the supply front end loaded rather from the Russians. We're eating that excess supply now, basically. In addition to which, I think you're going to I think this is delayed a real turning point where you're going to find demand hasn't subsided to the degree that people thought. People thought that EVs were going to take over the world, and I think that that's a long way off if it ever does come to pass. The main use for PGMs is still catalytic conversion. There are other stuff that they're important for. And so I think I view it similar to the uranium sector in the sense that uranium was such a low cost of input to a nuclear reactor, call it 5-6%, that if the cost of that input fuel doubled, it really wasn't going to change the utility decision in order to contract more of the feedstock and the uranium. And I believe there's a podcast with my uncle Rick, and we talk about this being the very same trade essentially, just in platinum groups. So the cost, I believe it's around 1,000, might be 1,250 bucks into worth of platinum or palladium to be used in catalytic conversion. And if the price of that doubles, you really don't have a lot of options in terms of what you can use. So you can substitute between the two, so palladium or platinum, platinum or palladium, but they're both at historic lows. Certainly, when compared to gold, and they're at a third. Palladium's at a third of a price that it was before February 28 in order when we saw the Russian invasion of Ukraine. So when we get to this point where the supply is super tight, you're going to have this ongoing dragged out demand that I think is going to surprise everyone. And that's when you're going to start to see these PGM metals really fly. So when you get into that scenario, if you're really confident on that thesis, which should you own? Should you own the low cost safe producer, or should you own the more highly levered torque? Is the word that you'll hear, the company that has the most exposure to rising prices. Okay, and they're going to be set at the highest, actually the highest marginal cost producers. The analogy to the offshore thesis would be that's a similar deal. You've got a supply crunch incoming with a demand explosion. That's obviously more imminent than the platinum groups, but how I think about this as an analogy is that you get to this point, you're very, very confident with the thesis. There's not a lot of supply that can disrupt your thesis, at least in the near term, because the shipbuilders are built out. Similar deal here. There's not a lot of extra platinum group metals that can come online because it basically comes from two or three places around the world, one being Russia, and that's eventually going to be taken out of contention. When you get to the point where all the drill ships, for instance, have been contracted, which do you want to own? Do you want to own the low debt, lower torque play? Or if you're really, really, really confident and you really do believe this is going to come to pass, well, of course, you choose Transocean because it's got the highest torque to rising rates. Sibanye is the Transocean of the platinum group's metals. Okay, so bear with me here with the analogy. It's high cost. It doesn't make a lot of money unless you get in the money in terms of the pricing for their metals. So gold is in the money for them. Platinum is way out there. They're not going to make any money. They're going to lose a ton of money platinum mining at the moment. So when I wrote this was around the capital raise, where they raised, I think it was about $500 million at 430, I believe it turned out to be in terms of share price. Quick revision of the thesis. Okay, so what's got my attention here? The platinum thesis or the PGM thesis, obviously. And I'm buying metals in the ground. So risky, got to use a pretty high discount rate. And I'm going to discount all these reserves at 20%. So I said to myself, look, you've got all this sort of platinum in the ground, and they've also got other stuff. They've got zinc, they've got uranium, they've got a recycling plant, all this sort of stuff going on. How much do they reckon they've got? And then if I discount that fairly heavily, what do I think that would be? So a little bit more updated in the Substack. If you want to go and read that, please do share and subscribe. You can see here how ridiculously cheap palladium is to gold at the moment. And I'm going to say if you were to put everything into gold equivalent ounces, okay, what do they estimate the reserves to be? And I'm going to use, in this case, a $2,000 gold equivalent price, which is obviously a long way below where gold is currently trading. Okay, so you take your equivalent PGMs, your gold, you standardize them into a gold equivalent ounce, and this is what I'm using here. And I'm just going to say, what if? What if we value this at around $2,000 per gold equivalent ounce? Gold's currently at about 2,500, and I think it's just going to keep rising and rising and rising, given the fact that everyone is abusing currency around the world in terms of monetary and fiscal policy. The in situ reserve value is somewhere around 140 billion. Yes, this is highly imprecise. Guess what? That's the geology of mining. Okay, that's resources and reserves for you. So why do I discount it at 20%? There's some work done by the boys, Tavia and Kevin over at Crescent Capital, that suggest over the course of a bull market, your average for in situ reserves that was paid by an acquirer was around 20% of the estimated value. So if you took that at face value and you took what I'm saying here for the calculations of the reserves at face value, you're looking at about 28 billion. Okay, so obviously there's a long way to go before you would even realize some of that value. But if it took 10 years to play out, your IRR would still be around 25%. So can I take a step back here? Can I say this is what the value I estimate of this resource is? And remember, as the currency is being debased, these metal prices are going to more than likely rise. Okay, because there's the only thing that could prevent that from happening is a massive destruction of demand, i.e., electric vehicles, 100% of the global fleet across the next decade, and that's not going to happen. What's the other thing that can disrupt me here? Well, if we had a miraculous new source of platinum and palladium equal to roughly 80% of the world's supply comes from just a few places. If we found a whole new heap of platinum tomorrow in Australia and you could get that out within the next 10 years, that might prevent the prices from rising. That also isn't going to happen. So I think there's a good chance the 28 bill could be realized over the next decade. That will be roughly a 10 bagger from the current market cap today, 2.7. As I look in the pre-market, it seems to be heading lower. So, you could be getting more and more of a discount as this video goes on. Okay. So that's the point. I think I'm buying a lot of metals in the ground with a large margin of safety. It's going to take a while for this to play out. There's going to be all sorts of volatility. So that was the original thesis. I also put in here that you would not use a free cash or any sort of earnings estimate at the moment because I was expected, you'll see here, I have not changed this at all, a negative expected return based on the earnings. This is an asset valuation. Um, it is a reasonably risky speculation. There are things that can go wrong, but the current earnings and the earnings next year are not what I'm playing for here at all. The disruption in demand has kind of been addressed. I don't think we're going to have EVs saturating the fleet anytime soon. So, strong demand still for catalytic conversion, probably rising to the upside. South Africa, that's the other risk. Now, since I made this video, South Africa actually went to elections, and I thought they were actually much more positive than what most people were expecting. And there was more of a let's call it a free market democratic alliance being formed. It was actually quite positive. So there's that aspect, supported by the fact that recent news suggests these guys are looking at shutting their US operations, not the South African ones, because the US are actually higher cost. So South Africa seems to be, dare I say it, playing out fairly favorably so far, which is a good thing. If you were to take that away, though, if you just had a bias against jurisdiction, you didn't want to know anything about the South African assets, totally fine. Well, what I said was let's just value the reserves these guys have got in terms of PGMs in the US, outside of South Africa. We're not even talking I think they've got zinc claims here in Australia. They've got about 60 million ounces or pounds of uranium as well. Very, very high cost, probably will never be brought to market, but it's there and it's probably worth something. It's not worth zero. That's what the market's currently offering this company for the value. So, all that being said, the PGMs they own outside of South Africa at $1,000 an ounce. Okay, 26 billion worth. Discount that to 20%, 5.2 billion. Okay, on the current market cap, that would still be a double here alone. Okay, just a double with a free call option on everything else that this company owns. Okay, this is a very, very small part of their business. Think about what would happen. Let's say if South Africa ceased to exist and there was no more platinum, palladium, or rhodium coming out of South Africa. Well, what would that do to supply? Nothing good. Price could easily double in a very, very short space of time. And so instead of 5.2 billion, you'd be looking at 10.5 billion for the US PGMs alone in that case, which would be a 4 or 5 bagger from here. Okay. That's what I'm still thinking. That's what I was thinking. That's what I'm still thinking. Everything seems to be going along well. So let's talk about market release, why people are talking about it at the moment, and what management are doing. I think management have done a very good job. They raised $500 million in the cap raise. They then said that they would not, they're treating shareholders well. They would look for all other alternative sources of liquidity. What they've done recently is signed it's kind of like a quasi forward agreement where they've taken an amount of their gold production at an agreed price range, and that's going to raise 500 million. Some people are saying even a billion if they do another streaming type deal in cash over the next year. So they've got a ton of liquidity there. Their debt maturity and their debt load is totally fine. They can afford to see, they can afford to ride out this market weakness until we get to the point where platinum group metals even get back to where they were, so to more reasonable levels. They don't have to moonshot at more reasonable levels around 2000 an ounce for both of those, or weighted across platinum and palladium, would be enough to bring their production really into the money. So headline earnings exclude some of the impairments that they had to pay out for the maintenance and equipment in US operations, which they're almost certainly going to shut down, are expected to be positive if you excluded those impairments. However, I don't think that's really worth celebrating. I think that, they had a flat to negative earnings year, and that was completely expected. I predicted that. What else is going on? What is the cause of that? They lost a little bit of production from one of their mines that was in the Shubhemeleli shaft. I probably did not pronounce that very well. However, the rest is really simply due to commodity prices. And welcome to the world of commodity producers. So what do you want to do in that case? Well, you want to have your assets set. You want to have a big bank of liquidity. Their cash at bank is very good. They have got a source of funds over the next year or so. Precisely when gold's at all-time highs, they're selling more of their gold, and they're ready to rock and roll in terms of when we get into a platinum bull market, which I don't know when, but I hazard a guess as to over the next decade, we'll certainly see prices normalize to where they were prior to 2022, February 2022. So that's that, guys. And not really too much to say, I don't think. Let's take a quick peek at particularly palladium, because that's the main competitive driver from Russia. So we can see here, 28th of Feb, 2022, right before the nasty things happened. You're looking at around about just a tick under 3,000 an ounce for palladium. Incredible to see. You had the stock price, so the market capitalization of, or the stock price, better to say, of Sibanye obviously tracks almost like a mirror. And if you look at that correlation there between palladium and Sibanye, it was up another 100% from here. So, um, that's how I see things, guys. What can I say? I think that there's a good chance for a multi-bagger. You may well have to wait a decade for it to take place. If you believe in high platinum group metals prices, then as long as the company doesn't go bankrupt and can survive through to that point in time, then you really believe in a much higher profitability for that company, and assumably a higher multiple, and presumably, I'm a little tired, presumably a much inflated stock price and return on investment from depressed levels such as today. So I would start to scale out of this thing when I had greater clarity around what was happening with PGMs. At purely today, at a guess, I'd say maybe around 10 or 12 bucks. I'd start to take a little off the table. But I really think like 28 billion worth of discounted reserves totally. That would suggest like a $30 stock price. I'm not saying I'd hang on to all my shares until $30 came to pass, but it's certainly something that I would slowly exit in tranches. Having said that, we're a long way off since then, but we'll see. And can we get back to, a $20 stock price? It's happened before. We'll see how we go. Thanks for watching, guys. Take care. Please do like and subscribe to the channel, and I look forward to catching you in another video shortly.